That 125 billion in government spend, that hasn't shut off. The demand for P&T hasn't shut off. The manufacturing of satellites and launch isn't decreasing. And so, although the broader market seems scary and that evil cephalopod you talked about is definitely out there and people are nervous, when we're talking about the space economy, I really do think we should take a deep breath.
From the Defense and Aerospace Report, this is the DownLlink, a podcast about the intersection of space, the space business, and defense. Not just what's over the horizon, but what's happening above it. I'm your host, Laura Winter. So, April handed us a number of alarming financial events and some reports that are catching early effects of the Trump administration's key trade policy, the tariffs, and their, well, gosh, how should I say it? Diplomatically, their irregular application, right? They're on, they're off, they're weird enough to include by name 2 islands inhabited only by penguins. Even what direction the trade war between the U.S. and China will take from one week to the next, it's muddy. Stock traders, Wall Street, they've reacted very negatively, dumping U.S. equities and shying away from U.S. bonds, wiping trillions of dollars of value off balance sheets and retirement funds. In a recent Oval Office meeting, the CEOs of Walmart, Target, and Home Depot painted a dire picture for how the 145% tariffs, if they were kept on all Chinese goods, these import taxes would not just affect their businesses' margins or their consumers' pocketbooks, but that the president should expect social media memes depicting empty aisles and shelves in weeks. We've also had a dust-up between President Donald Trump and Jerome Powell, the highly respected Fed chair. And then there are those reports I mentioned. Jobs-related reports are positive, but everything else is tinged by economic uncertainty, whether it's from the Fed or a university or the International Monetary Fund. If you are a consumer or an economist, weathering this unpredictable environment is a central theme. And yet, a voice you are all familiar with, George Pullen, who is a space sector economist, he's saying we, the space community, should breathe and stop borrowing trouble. He's not worried about his space investments. George says space is different. Is he right? Here's our conversation. Hey, George, welcome back to the DownLlink Podcast.
Thanks for having me back. I'm excited to dive into it today.
Now, as you know, before we begin to tackle how the macroeconomic forces are or aren't affecting the space economy, please take a moment to introduce yourself. George.
Sure, thank you. So I'm George Pullen. I'm the Chief Space Economist for MilkyWayEconomy. We are a fifth industrial revolution think tank. The fifth industrial revolution is, of course, the opening up of the space economy. We're located here in DC, but we also have offices in Texas and Florida, and we advise for small to medium-sized space industry and other deep tech companies.
And I'd also like to point out that I think, at least unofficially, you are the economist for the DownLlink Podcast.
I will gladly accept that title. Thank you.
No, thank you. Because the reason I've got you back on sooner rather than the quarterly roundup is the fact that we're seeing some pretty dramatic economic and financial developments. And someone said, when the U.S. economy sneezes, the world economy catches a cold. And I actually really did try to find out who said that, and there are no good answers. But the U.S. economy is sneezing. We sneezes, at least according to the Fed's Beige Book. The Beige Book is a Federal Reserve System publication about current economic conditions across the 12 Federal Reserve districts. Those districts are geographic districts. It's published 8 times a year, and the latest edition was released on April 23rd. It said a lot of things. So please just hang on, everybody, because I'm giving us a little context here for the conversation. But here are some of the sneezes from that report. First, the outlook in several districts worsened considerably as economic uncertainty, particularly surrounding tariffs, rose. Second, several districts are reporting that businesses are pausing or slowing hiring, and some are even drawing up plans for layoffs. Add to that something I'd expect we've all seen, and that is rising prices. At my local supermarket, I also recently saw a lot fewer choices. And the Beige Book says that businesses are already raising prices in anticipation of tariffs. So that means consumers like me are already, in a way, paying a tax that hasn't even been imposed by this administration. Now, that's just rotten, quite frankly. But for businesses, that also means margin compression. That's less profit per unit, because if a product's price rises too much, I'll swap it out or just keep pushing my cart onto the next, thing on my shopping list, right? So how does this translate for the US space economy? It's not really consumer facing, at least not in the classical sense, but suppliers are affected by tariffs. This podcast has covered rare earths, minerals, and superalloys. Steel and aluminum are tariffed right now at 25%. And there are other parts of the space supply chain that will be vulnerable if tariffs are imposed. And then, I know this is long, but hang with me. And then there are the public equity and bond markets, Wall Street. It's crazy town. I don't even want to look at my portfolio, but the S&P 500 is down roughly 12% from its last high. That means it's in correction, and it's been there for a wee bit. That's more than a wee sneeze. And in the midst of all this, I bump into you at Space Symposium a couple weeks back, and you say, Laura, tisk tisk, don't fret about the space economy. Okay, fine. Why not? Explain. I'd like not to fret. Maybe you should start with, what are we really seeing with the greater economy? George, the floor is yours.
Whew. All right. That was a great setup. So let me start with a little bit more about the Beige Book, right? So the Beige Book is essentially how to explain to your friends and family that you are an economics geek, because now that you're reading it too, you've come over to the dark side. Welcome to the family.
Thank you very much. And it's totally your fault.
So economists like reading the Beige Book. Maybe a few investment bankers or analysts read it. But the point, all kidding aside, it's very important, statistics. The Beige Book, particularly the one that just came out, we have to keep in mind that the data that went into that is primarily data from February and March. And the data period closes usually 10 days prior to its release. So the release was April 23rd, which means the data probably closed April 14th or 13th. That's just standard inside Beltway federal Beige Book information. So why is that part of this important? That means that this data was collected during the time of increasing uncertainty, right? And that
when
time
Crazy Town was starting to get some permanent residents.
Well, I'm not going to use the Crazy Town, although that is a wonderful song, if you know the reference. But the increased uncertainty, though,
it's better than Ghost Town.
It is a better song than Ghost Town. But the increased uncertainty happening during that period, I believe, has largely been realized, and that was part of the point I was trying to make when we saw each other in Colorado, because while fear is debilitating for markets, even if a market doesn't like, and by a market I mean, the broad collection of investors and bankers and participants, and like you said, people staring at their 401k, it's the fear that's the mind killer. It's the fear that stops us from taking action, whether as a business or an individual or as a banker, greasing the wheels of commerce.
I hate to push back on you here, though, but isn't it also about responsibility? I mean, fear, yes, as folks that have a 401k, yes, for them it's definitely fear. But if you are a fiduciary, isn't it also responsibility? I mean, if you are a CEO, if you are a chair, if you are somebody with a fund, et cetera, you're somebody, the cold callers, them, they call you up. They say, hey, invest in such and such and such and such. Well, at the end of the day, let's say you buy that, but they have a responsibility to protect that investment.
Yes. And they also have a responsibility to deploy capital and manage said capital and make hiring decisions. So when you go through that list of things that you can control, can I delay a hiring decision for a few more weeks or a few more months? Well, it largely depends. But yes, maybe you can delay some employment decisions. Does it mean that I can continue to sit on what we like to call in the street, dry powder indefinitely? It certainly does not. You cannot sit on dry powder indefinitely because some other money manager will come by and take your cheese. So,
Going back to your brain flow, which I'm very sorry that I interrupted,
no,
but I
no.
just had to like speak up on behalf of, the folks that don't have a voice in this particular conversation. Keep going.
Oh, okay. Yeah. So I really think that it's the uncertainty that's being picked up by this beige book, again, based on the period of the data, right? And so if you look at what's happened in the period that is, April onward, and particularly the last 3 weeks onward, we now know that we are adding tariffs, increasing tariffs, and engaged in the move to aggressively onshore and reshore. And I think when you look back over other periods of time where we have had tariffs, the answers are a bit mixed, but I do have to say they are not all negative. And I want to give this counterpoint because I hear so many economists doing the other way. And look back on, Reagan in the 80s for Harley Davidson, right, where he implemented tariffs around the, I believe, Japanese, not Korean, but don't quote me, motorcycles, right,
We
to protect
are
Harley
on the
Davidson.
record.
Well, so it was one of those two, and I forget which one. And then the same thing, we saw Obama do tariffs with Chinese tires because they were believed to be doing dumping. Dumping is when just to define the term in economics, dumping is when another country produces a large amount of something at a below market rate to try to saturate the market. Dumping is essentially what a country does that looks a lot like what a monopoly would do in a market. And so we've seen these actions before with, like I said, motorcycles and tires. Bush did it with the steel industry. Trump did it last time, 45, not 47. And so we've seen tariffs before. And what tariffs do, if we really go through the supply and demand, right? So this is a podcast. There's no visuals here, but you got your supply line, you got your demand line, and it's like, okay, where are these two things going to meet? Oh, well, there's the price and the quantity. Okay, blah, blah, blah. So, but what really matters is those are snapshots in time. And what a tariff does is it provides a short-term, this is a key word here, short-term protection and relief mechanism. Okay. That short-term protection and relief mechanism can have positive effects when they are managed, right? So it can create a period of time like what Harley Davidson had to upscale their manufacturing, repenetrate markets, double down on their brand, and come out of the situation improved and preserved. And Harley Davidson is still a fantastic U.S. company and enterprise, right? You can see other examples where the pause and the temporary relief that tariffs provide have not always been managed well. I'm not going to pick on, well, I will. We could say maybe steel, right? Maybe we didn't manage that one quite as well. We could have probably done it better and made sure that we had more steel manufacturing come back and get modernized here. That had a lot more to do with the amount of regulatory burden associated with doing that, and that the relief wasn't enough to overcome that. But we're getting in the weeds here. Let's come back out to broader picture. So not all tariffs are bad. The other thing to remember too is sometimes a tariff is a response to an unfair subsidy. And let me talk about what that is. So an unfair subsidy can come in the form of a direct subsidy. An example would be a reverse stumpage tax, which is when if you harvest lumber on land owned by a nation, where you are in a nation where all the natural resources are owned by said nation, then they will actually pay you to cut down a tree. Well, if they're paying you to cut down a tree and you're exporting lumber, that means your import costs aren't just free, you're making money on your input costs. So it would be really hard for an American lumber mill to compete because they have to pay for their trees. And then they have an input cost because they're paying for their trees, whereas you actually got paid to use something. So You can have things like that which cause unfair situations. And if that's the case, tariffs make sense because it then rights a existing wrong. Now, direct subsidies, are very are much more easier to identify than some of the more, I will say, creative financial economic tools that nations can use, right? So these can be deeply subsidized loans that they never anticipate you paying back being issued to large manufacturers in provinces where you want to keep your people happy, China. Or it can be examples of manipulation of foreign exchange rates. And when foreign exchange rates are manipulated so that your currency is below market value, you also have the situation where now your goods appear cheaper, but in truth, they are only appearing cheaper because of a currency manipulation. So again, if tariffs are in place where they are correcting for some of these things that are distorting what a free market would have produced, I don't take objection with them.
But George, I mean, you're giving examples of very particular products. These are blanket tariffs. And we've got reciprocals, right? And when we're talking about the space economy, as part of those reciprocals, so we've got, reciprocal tariffs that are coming from places like China and well, not others, because our tariffs have been paused in some places or most places. But on top of that, there's also trade restriction or export restrictions that countries also employ as a response. And these tariffs aren't like sector or even product specific. This is an across the board thing. And I hate to push back on you because I adore you. You are my economic sensei here. But this is a wholly different kind of tariff regime than what you just mentioned.
This isn't not just motorcycles or just tires or just steel. Right. I hear you. So my response is that I think if we pull back a few layers here, and again, this is not even Professor George, because I'm not really sure how any of the schools would feel about it. This is George having a one-on-one with you. No one else involved or acknowledged here, just me. I think that if you pull back a couple layers here, you can see that this is in response to probably deeply seated activity of subsidy and currency manipulation that has gone on for a long time. And when something goes on for a long time like this, it starts to experience the most powerful force in finance, right? Compounding. And so when a rebate, ill-begotten, goes on for a long period of time, or a waiver on land taxes or whatever it is,
or something that's a lateral type of subsector, gets that rebate because, hey, they got it, so we're a lateral to that subsector, so we should get it too. So it kind of expands, is what you're saying. Like it turns into kind of like an octopus with many, many, many more legs or arms than the original number.
Yes, an evil cephalopod of some sort. And so as that as that evil cephalopod of subsidies and currency manipulation and waivers and everything else accumulates over time, it really builds these advantages that become almost insurmountable without broad across the board action. And so although people don't all like it, that broad across the board action, I believe, just George believes that came because of that. Now, just to bring it back to space, right? Because we're like way out here in the broader economy.
And that's exactly where we're going next because, so then why will the space sector be more resilient to these, pretty dramatic changes, right?
Right. So because let's talk about the space sector from the point of view of its sources of money, right? I'm an economist. I'm going to tell you to follow the money, right? And so if you look at just where the commercial revenues are coming from for space, where space makes its money, right? Space makes its money in a very large way from PNT. I don't see how tariffs affect PNT. Now, I would love someone to, it's just the two of us. Someone else can put it in your comments when you when you put this out to the universe, but I don't see how PNT is affected by tariffs, right? Well, PNT is almost 40% or more of commercial rev. And so PNT is preserved. That's a huge section of the money that we have to follow when we're talking about the space economy. The other part,
it goes into other sectors as well, right? I mean, if you're talking about PNT, we're also talking about apps like Waze or Uber or all of that because they depend on PNT.
right?
But hang on a second, right? I know that there are already supply chain price increases affecting specialty manufacturers like firms that work with super alloys. Their margins are getting squeezed. I know at least one of them that is already negotiating with both the super alloy producers and the end customers, which happen to be space launch companies with serious name recognition. And even if you look back to February, when this beige book really is taking its data that we were talking about up top, right? There's a company called Dynamic Aerostructures, which also supplied to the defense and space industries. It filed for bankruptcy. Rising costs were the number one reason, among others. So what's going on has got to hurt something. I mean, things are going to become more expensive. If you have to pay more for the particular pipe for a rocket engine, you can't put your stuff up there unless you pay the increased price, because we know that the price increases will be passed on to the customer, or the margins are going to go down for the supplier. And if they go down too far, then the supplier, could fold.
Right. And to respond to that, it's usually a mix of both. It's usually the demand signal changing, decreasing, and operating margins getting thinner. It's usually not just one or the other. And that demand signal change is based on what we call in economics the elasticity, which is just the responsiveness to change of the consumer. And so again, let's back it up, right? So the percentage of spend on PNT by some of the apps that you mentioned is extremely small relative to what they make from their said rideshare company, right? Uber is not going to lose more money by not having PNT data, as to just extend your example, right? The same way, if we think about, again, I want to go by segment, but it's kind of a cheat code because you only need to do 2 segments. We talked about PNT. Now let's talk about, well, again, I love the space economy of the future. 4 trillion in the 2040s, 10 trillion in the 2050s. We're getting there. But right now, today, I'm giving you space industry numbers, right? So let's talk about the other big thing besides PNT. That's your launch revenue and your satellite manufacturing, right? Together, what we see with those two is huge growth over the past few years. We've had twice as many satellites. We've had a huge increase in launch and the rapidity of launch, right? I think that the last estimate I saw was that 18 billion is going to launch service providers in 2024, and that number is expected to increase again in 2025. So again, you're talking 25 billion in launch services. I don't see someone who makes, or a series of people who are making that sort of money in launch services not able to pass on cost or have a hit to margin for some of these increased input costs, right? And then again, and the last point of the stool here, and I'll just make it real quick because again, we're talking about today's industry, is the government spend. Government spend worldwide, right? Because we're doing worldwide stuff here. Worldwide, you're talking over 125, approaching 150 billion. That's a B, billion dollars. 91 nations have quote unquote space operations. Now, obviously, 10 of them are significantly more than the other 81, but it's a big market, right? And that 125 billion in government spend, that hasn't shut off. The demand for PNT hasn't shut off. The manufacturing of satellites and launch isn't decreasing. And so, although the broader market seems scary and that evil cephalopod you talked about is definitely out there and people are nervous, when we're talking about the space economy, I really do think we should take a deep breath.
Okay, but seriously, there isn't anything that you find worrying?
I worry less about a decreasing amount of economic activity in the space industry than I do worry about an increase in international tension. And that's far above my pay grade. But that is definitely something that I worry about more than I worry about space spend. I feel like space has a continued trajectory of good upside. Ha ha ha. And I also think
Ain't
that,
like you're not invested in that, but yes.
I mean, hey, if I didn't talk my book, I would be doing my portcos a terrible disservice. But no, seriously, I still see the upside. I do think it is more resistant to these tariff tremors than other sectors because space is different.
Okay, so you just brought up other sectors, right?
Mm-hmm.
So comparatively, you say space is better off than other sectors or
Mm-hmm.
subsectors. And I'm using that term gingerly
Mm-hmm.
because sectors and subsectors, it depends on what they are, depending upon what source you're going to. But if you're looking in terms of investment sectors, space is definitely a subsector, probably a subsector. I can see that if you compare this to the automotive or agricultural sectors, that this could be true. But I think you should really explain that because this is really a dance between tariffs, counter tariffs, export restrictions, right? If we're thinking about magnets, right?
Mm-hmm.
China says, "Hey, no magnets for you, not unless you fill out a novel's worth of paperwork first." And they probably do want it in paper, actually. Affordability and demand, margins and profit. I mean, how do you pull that all together?
So if you go again to use it broadly, sector by sector, there are certain expectations around operating margins and profitabilities that are different from sector to sector. No one assumes a utility company to have double-digit year-over-year gains and to 10x in a few years like you would a Silicon Valley tech startup, right? I'm delivering water or electricity. I'm not building the next greatest large language model.
But
And
it's
so,
certainly slow and steady because if you look at the Beige Book, it's one of the sectors
yeah,
that is actually doing just fine.
right. And so again, it's complicated because each sector has different expectations of what is an acceptable margin for those companies to make that participate. And they also have different, again, I'm going to use the word a second time, elasticity across their consumers, which means that some of these sectors have the ability to increase price in response to a tariff or reciprocal tariff type of regime. So if you're talking about Walmart, right, who gets 60% of their goods from international manufacturers
And warned the president that if these tariffs continue, that things are going to start disappearing off the shelves.
Right, right. And so if you're talking about, and again, conversationally, if the number's a little bit less or a little bit more, and I hadn't seen those public statements, but if you look at something like that, are they able to pass on those price changes? Likely they're not able to pass on all those price changes because they don't have consumers that are going to still buy as much given those price changes. But again, bringing this home to space, that's not the world that we operate on as space economists and space industrialists and space business people. We have the ability to provide extreme amounts of volume and value from our PNT, our launch, our satellite manufacturing, and the services that we provide to international governments. And so we are able to respond to these gyrations and these movements in price and to pass those along in a much more sound way than someone who is interacting with, a consumer who doesn't have the cash to respond to prices. We are not the same as Walmart. Space just isn't.
So, but to go to margins,
Mhm.
right? And with the knowledge that margins could be down in the space sector, I'm not saying that they 100% will be, but it seems highly likely. And the public equity market values are down, right? In correction land. Generally speaking, could this then be a good time to get into space investing? right? For either the venture capitalist or the retail investor looking for something space on the NASDAQ?
Ooh, that's tough because the universe, not to extenuate a space pun, but the
You
universe,
so intended. Yes.
yeah,
But
it was, it
yeah.
was.
All right.
The universe of space industry companies that are public is relatively small. And so really that becomes less of a, can I make a good sector-wide play versus how
An
well.
ETF
Right. So something
might be
broad-based.
the way to go.
Yes,
Yeah.
something
Because I mean,
broader
there
based.
those values, the valuations per stock are down,
Right.
right? I mean, it
And
is
if
at a
you have
discount.
right, and if you have an investment policy statement and your advisor or tax professional tells you that this makes sense for you, and you're saying, well, geez, I just heard that space is less responsive to price increases and they're able to pass those along and maintain their margins. Geez, that sounds interesting. Then with things that are publicly available in space, you really do have to think broadly because it is a much smaller group, and many of what I believe to be the best space opportunities are among the privates. That's why I spend my time with them and put my money with them,
But
is
so
because
then
I
would this
think the
be a
opportunities
good
are there.
time? Would this be then a good time for others of your ilk? I mean that kindly.
Of my tribe. Yes, I do.
Of your tribe, yes, of your tribe, to then think about distributing some of that dry powder.
Yeah, I think that when we look at what consumables, what other sectors are able to pass on, and what other sectors might experience with their squeeze of margins, right? They're going to get their net profit margins pushed below 10% or whatever the case may be, whatever your individual magic number is. As that's happening, yes, looking more strongly at space, and I'll even take a quick pause there and say, and other related deep technologies makes sense. Because if you're already thinking, I have to be long term here, I can't let the short term scare me, then the next question must be, where do I believe the long term is? And if I believe the long term is in space, which I do, then that's where I'd want to spend my time, energy, and treasure.
Okay, so then what should these small, interesting companies do to strengthen their position to weather price increases and pressure on margins? Because they're already bootstrapping, and bootstrapping is a word used to say basically, they have small margins to make stuff work, and they're going to do it because they believe so ardently in what they're doing that they're willing to live like paupers to make it work, right?
Yeah, I've seen it. Yep.
But here's the other side of it. They also need to keep their highly talented people on the books. A danger here is that some of these highly talented people, that if they're laid off, they could not just go to the competition next door, but worse, right? Non-disclosure agreement be damned. I also see this as a vulnerable time for operational security.
Well, so I would say, and your question doesn't quite lead me here, but by saying the word security, it does trigger this thought in my head
I was trying
that,
to trigger you.
yeah, it does make me think that this is really about what your technology can help you sell today and where you can pivot into where you didn't expect to be. So let's just say it out loud, Golden Dome, right? So Golden Dome is one of the biggest opportunities for new space contracts. Full stop. That was a period. It's a huge opportunity. I haven't seen anything like it. And if you have adjacent complementary technologies, solutions that you thought were going to be used to build a hab on the moon, or you always conceived of helping with a space station on Mars, or whatever it is, I'm just giving examples. But there's a piece of that technology that would enhance boost intercepts, or would enhance direct energy, or would enhance other things that are technologically feasible that no one else knew about, because there's part of your secret sauce for the thing that you were working on, but maybe it's incredible for other velocity and maneuverability adaptations. Then you need to speak up, and you need to go after it right now.
Now,
Because
like
and that's how you
not next month. Now.
yes, like as soon as we're done, go do that. Because that is also what is so exciting about right now, right? It's not just that space is different. We're not consumables. We're not, on the shelves. It's different for us. We get our revenues from PNT and launch and satellites and government spend. It's also that we have this huge opportunity with Golden Dome. And I'm not suggesting that some smaller, medium-sized company that you've never heard of becomes the prime on it. What I'm suggesting is that if you have something reliable that can interestingly solve, atmospheric conditions or do things with image processing, that we're going to solve something else.
Or radiation, resistant couplings.
Yes.
Right, because we're talking about stuff being, up on orbit for a grand period of time, and it needs to be utterly, totally reliable.
Right.
Just for everybody out there who is going to possibly look into sam.gov, if you put in the words Golden Dome, you may or may not come up with what you're looking for. Another thing to look for is next generation missile defense. That is what the Missile Defense Agency, or MDA, is using, as is the U.S. Space Force. We are running out of time, so I do kind of need to wrap this up. But I think we need to leave the listeners with a little bit more, such as maybe some mental tools. What important metrics do we need to pay attention to understand, to forecast the future for the space economy? What do we do while we wait for all of this to shake out?
I think the metrics that most people can keep an eye on, and the easiest metrics they can keep an eye on, is the number of launches that are occurring, who's participating in those launches, what their payloads are, i.e. how many satellites are going up. The more and more you see PNT and GPS use, that means that there are more satellites up there supporting it. And I think the third metric is how much we see worldwide governments spending on space, because again, they're spending to de-risk and secure. And so those dollars go first, or if they're not dollars, someone else's currencies, those go first. But all four of those things are transparent and we can watch and have good metrics around.
George, thank you so much for your time and for coming on the DownLlink Podcast.
You're very welcome. I appreciate being here.
That's it for this week. For your daily dose of award-winning defense coverage, listen to the Defense and Aerospace Report with Vago Muradian. And for the maritime domain, listen to Cavis Ships with Chris Cavis and Chris Cervello. And get your air domain news and analysis from the Air Power Podcast with JJ Gertler and Vago Muradian. I'm Laura Winter. Thank you for listening.